Hello, this is Vance, and this is Tuesday, November the 7th, 2017. These are the CL trades for today using the slow hand method for price action. Well, it was really just a consolidation day more than anything else. Pretty tight range, really only between, well, from the high, which was an overnight, say 57.60, to a low of, let's call it 56.90, 70 ticks, but that's in the overnight. If we look at the day, and if we look at 9 o'clock, which was right here, the open, right about here, you know, the range wasn't that great. So I mean, we're looking at let's say call a low of 56.90, 56.85 to a high of 57.40, so 50 ticks roughly over the most of the day. But there were some trades, and let me talk a little bit about those, especially after the open. More than anything else, I mean, when you're talking a range day, why was it kind of a tight range today? Probably because there's the pretty large run up that we had yesterday because of the issues in Saudi Arabia, and as a result, the price of oil really punched up over $57 by a fairly significant margin. Well, I got from yesterday. Yesterday's high was 57.51. And so if you have a big run up on a day and there isn't anything to sustain it for follow up, you're probably going to have somewhat of a pullback or at least consolidation. And I think today was mostly a consolidation day. We have news coming out, the news that came out at 4 p.m. or 4:30, API report. And then, of course, the DOE report tomorrow at 10:30. Both of them were expected to be somewhat of a draw, and you can see that this is 4:30. You can see the draw off of here was kind of a bearish, but it bounced right back, and now we are right. This is at I'm doing this late at night, so it's just at 9:45 Eastern Standard Time, and you can see prices kind of rebounded here. So it's really within that range. Now, if we see that the open was at 9 o'clock, right here in this area. Price started trending down a little bit slowly till about 10 o'clock, an hour later, and then rotated back up, came back down. Now, why is this significant? I mean, it wasn't really strong. I mean, you could have looking at, well, at this point in time, is there any place to go long here, looking at maybe retesting the previous highs in this area? I have to say not really. They really stacked up quite a bit. And so you really want to see some separation. So you can see a bar like this one, and let me just make this a little bit bigger on the 800 tick chart here. You know, you see a bar like this one where you see this overlap, prices going up and coming back down, going up, coming back down. When you see these bars like this with the stacking up side by side like this is just like a doji. That's what it is. On a higher time frame, this is a doji. The same is true here. You see this bar up, down, up, quite back down. You don't really need separation. Now, the trend is somewhat down. Now we get a larger magnitude with bars coming up, bars coming down, but you can see this reversals, bars coming up, bars coming down. Now, when you get to something like this, it really kind of breaks this trend a little bit. Now you see more sideways and more a higher magnitude of rotation with prices going up and going down, and the timing. We're talking about this is roughly 10 o'clock, 10 a.m., 10 a.m., and this is 10 minutes later. So there's more volume coming in and there's more volatility. Well, absolute more volume. So we have more players stepping into the market after 10 o'clock. And then you can see this is a pretty big run up, turns around, comes right back down. And then another one where it comes back up. So this is like a big V, like prices up, prices down, prices up. And so you can see that on a way wider time frame, these are just bars that are back and forth. So if you looked at a 30-minute chart, let's say that this is 9 o'clock. So we have 9:30. This is 9:30 right here, right here. This is 10 o'clock. This is 10:30. This is 11 o'clock. This is 11 o'clock right here. So you can see, if you were to take a look, if you were to really squish this together, this chart, I don't know if I can do that. Let's see if I can. Let me just kind of move this like this. If I really squish this chart together, let's just take a look at this area right here. If you say that this is like just one single bar, like if on a half-hour basis, you can see prices, how they're moved up. So if you look at the bottom of the scale, This is 9 o'clock right here to 9:30 roughly. 9:30. Pardon me, from 9 o'clock to 9:30. 9:30. This is 10 o'clock. It really hasn't moved. 10 o'clock to 10:30 is up here. 10:30 to, this is 10:41. So this is 10 minutes right here. So 10 minutes to go this far. Back up here, this is 11 o'clock. So you can see that this down here and up to here just kind of bounced within a half an hour. Down to here is this 11:30. So what I'm saying is that if you look at this if you looked at a 30-minute chart, from a time-bounded chart, you would see that these bars are basically side by side. Now, based on that idea, and using a 15-tick stop box, I would suggest that you could short near the tops of this area, as long as you're using your 15-tick stop box where the previous highs are, and go long at the bottom of these areas, and with the 15-tick stop. And so right here, for instance, price comes down, doesn't test what the previous low was. It does rotate, it does come back down shortly and then find some support and then heads its way up. So even like buying here, will it get your 15 ticks out before it starts to turn back over? Now, the other thing is that, why do I use a 15 ticks? I use a 15 ticks because the average rotation for the CL before it moves in the other direction is roughly 30 ticks. And you can see this is a little bit more. The magnitude is a little bit greater, but this is 30 ticks. So you can see this maybe move 45 ticks a little bit more. But remember, we're talking about some leftover volatility. But if you look earlier, let me get my sticks here. These are 30. This is 30 ticks right here. And if you look at this 30 ticks, you look at this is roughly a 30 tick move here. This, when it completes, this is roughly a 30 tick move before it kind of turns around. From here, this is a little bit more than that from the bottom. This is more like 60. Here, again, if you take off to this bar, it's 30 ticks, 15 back, 15 up here. To the bottom, this is 30 right to here. So I think that even just from this perspective, like 30 ticks and using a 15 tick stop, so if you enter, as long as you're below the previous low, and we're looking at from support from the top. So that's why I use that. And I use it because it's a visual reference. It's faster to put together on the chart. Okay. All right, I hope I haven't confused you too much. Now, where are the trades? Well, in this case, it would be worthwhile. I mean, I'm not taking a trade here. It hasn't really come back up here, but certainly in this area, you could look at taking a trade, particularly if you can get it, you can limit in and get your 15 ticks before it hits the previous high. Now, had you limited in here, it would have gone to at least your second target, right? 15 if you're using trading 3 lots, 15, 30 ticks. If you limit in here, okay, now not necessarily you do that. This is really a strong turnaround here. You want to see maybe some more consolidation, but it just kind of blew through here. You want to see I'd like to see it kind of rotate back up and have some type of a second entry. Maybe break this channel, move up here, and then turn down. More like this one. So prices moved up here, pulls back, and then get in here. That wouldn't be necessarily a terrible trade, but I would like to see my stop be above this area right here before I would get in. And to limit in on something like that, that's a tough thing to do for a sell. Now, had you done that, it would have worked out. In fact, you would have almost got your second contracts off, but you certainly would have gotten your first contract off. When prices get to the bottom of this channel, you see it breaks this channel, comes back down, and here's an area that you might consider going in, as long as, again, where's the previous high is right here, so you have to limit in toward the bottom. I'm a big proponent of, once you determine where the outline of your range is, you want to limit in so that your target is going to be before it hits the top of that range. So for instance, if I'm looking at an area like this, if I determine that the range here is this area right here, let's say I've determined that this is the top of the range, that means that I want to make sure that my target, where's my stop? Well, my stop is below where I see previous support. My target is before the top of the range, and so that's for my first contract. It has to break out in order to get to the second contract. You see that? Hope I'm making a little bit of sense here. Anyway, have any questions about some of the stuff that I've talked about, let me know. I can just assure you that because it was a consolidation day, I was looking more along taking trades at the top and at the bottom, and or at the bottom of this range. So if you're having trouble seeing it, one of the things that I try to do is you just kind of squish down the chart here a bit, like this. And when you squish it down, you can see the range a little bit more clearly. You can see that maybe this is the top of the range, this is the bottom of the range. You see this rotation like this? So looking at entering near these bottoms like this and selling near these tops. And you enter at the bottoms for, if you're going long, and you sell near these tops. And you're not going to get a lot of trades. In this case, there's a couple here, but you have to look at maybe a little bit more reversal type of pattern. This is pretty tough because this kind of went up here and turned around right away. This is a little bit easier to see, but you can see that there was more support near the bottom here, which made make you a little more comfortable. So you might have been a little bit more comfortable going long because of the fact that it gave you a little bit more time to think about it before it went in the opposite direction, particularly with something like this. Anyways, I hope that makes sense. Anyways, that's it for now. This is Vance. Thanks for watching. Bye for now.